Welcome to an episode of Ask Madam Money. So I've been receiving a lot of questions via email, and so in order for me to respond to all of the questions, instead of responding to them individually, I decided to do a Facebook Live and a video live, especially with the first three questions that I've been asked. So the first one was, how can I start saving with limited funds? A lot of us are dealing with limited funds. We're living paycheck to paycheck, and we want to save money. We want to pay off debt, but we find it very difficult because we are living paycheck to paycheck. And so it's important for us to try to figure out how we can put money aside, whether it's for emergencies, for opportunities, to pay off debt, whatever it is, we've got to figure out how to put money aside, because we should be paying ourselves first, right? That's the first law, is to pay ourselves first. So how do you pay yourself first when everybody is taking all of your money, okay? And so I wanted to talk to you about how you do that, okay? But before I do that, I want to be very transparent in the reason why I am sharing this information. I have been through financial hardship. I've been through anything you can think of. And so my passion is to share information so that other people don't have to deal with what I dealt with, or if they're dealing with what I dealt with, they can get out of it, okay? So that's why I share the information. Now, here's the thing. I'm going to be very transparent. I'm going to share these tips. These tips are free. You probably know them already. I'm going to give them to you again. I'm going to reinforce them to you. And is it going to cost you anything? No. All I ask you to do is I ask you to share the information so it helps someone. And also, I ask that you share this with someone that may want this information shared at their church, at their organization, at their employer, anywhere. So I can share this information, to expand my speaking engagements, because my speaking engagements expand my impact on helping people. So shout out to Home Depot, February. I did them in February. It was a great time. We had an awesome time. And I told them the Marvel money story. Spelman University, shout out to Spelman University. Had them in February. Same thing, but we talk more about student loans and all that. And I'm looking forward to April. April's going to be very busy for me because it's Financial Literacy Month. So that is all I ask you to do. Share the information to someone that you like, know, and trust, that you care about, but also to leverage the information that I'm going to give to you. Again, I'm going to reinforce some things for some people. I'm going to share some new ideas with some people. But the reason why I put it in this context, I wrote a book called Financial Fornication, okay? Financial Fornication, the reason why I wrote the book was because when I was the interim president and CEO of a financial institution in Atlanta, Georgia, I had a lot of reality TV stars, rappers, athletes, actors that came to my credit union, and they wanted to borrow money so they can buy the stuff to bling out on TV. And when I decided to finally watch them on TV, I realized that they were open to talk about who they slept with, who they wanted to sleep with, who they were in relationships with, but nobody wanted to talk about their crappy credit. Nobody wanted to talk about the fact that they weren't saving anything. Nobody wanted to talk about the fact that they weren't prepared for anything financial. They just wanted to borrow money to buy the nice cars, to buy the nice house, to buy the nice clothes, to buy the nice bling bling, to get their hair done and all that stuff, to look good in front of the camera, to make people think that they had all this money, when actually they were borrowing the money to look like they had money. Go figure. So, and I not only did I realize that they were doing this, but I also had to check myself. I was, in charge of a financial institution, and my finances were, horrible and wrecked. I can run a financial institution. I can make it profitable. I can reduce the losses. I can do all this for other people, but I couldn't even do it for myself. What kind of mess is that? I couldn't even manage my own finances as an interim president and CEO of a financial institution, but I can run a financial institution. I understood the financials. I can make decisions based on the financials. I can forecast. I can do what's called shock tests. I was very close to my CFO. I was very close to my operations person. But in my life, I didn't have a CFO in my life. I didn't trust my, an accountant. I didn't make plans. I didn't do that. But I had a whole financial plan and forecast for the financial institution, and we had a strategic plan for the financial institution, but I didn't have a strategic plan for my own personal financial situation. So I completely get it. I completely understand. And I want to make sure that everybody has the information that they need to not be in the situation that I was in. Okay? That's me being transparent. So within my book, Financial Fornication, I talk about how we are financially promiscuous with credit. Okay? We use multiple credit cards, multiple lines of credit. We get credit, we abuse it and use it. And we have all these financial one-night stands using credit instead of cash. And then we have these long-term financial relationships with these financial one-night stands by only paying the minimum payment. And then we realize we're in a financially abusive relationship. Our financial institutions, we're getting our assets kicked by our financial institution. High fees, high interest rates, and poor customer service. And then we end up with financial STDs, substantially tremendous debt. And them bitches hurt. They hurt, okay? So they not only hurt you, but they also hurt, infect, and affect your family, the people around you, because now with your financial STDs, you can't go on that trip. You can't do what you want to do because you are dealing with those substantially tremendous debt, okay? So in the book, Financial Fornication, I talk about cures. Now, I'm not here really to talk about financial fornication, even though I just did get the book, Amazon.com, Financial Fornication, get your copy. But I want to talk to you about how to save. So somebody asked me a question, Tara, how can I save with limited funds, with limited money? And so after I got a little bit more information, I realized that they were wifing their side piece account, okay? So here's what I mean about that. There's a lot of people, when you ask them, do you have a savings account? And they say, yes, they have a savings account. They don't have a savings account. Let's be real. Reality check. You don't have a savings account. You have what's called a side piece account. A side piece account is that savings account that is tied to the checking account, your main squeeze, right? Where your direct deposit goes in, where your debit card's tied to, where you do all the transactions and all of that stuff, pay all your bills. So when the main checking account can't give you what you want, you tap that asset of that side piece account, okay? So here's the thing. With a side piece account, you can never get fully what you need because it's always depleted. It's not how it's built. A side piece is never built to give you everything that you need. It's built to give you what you want in limited supply, right? So with your side piece account, you put $100 in there every pay period. Then when you go through your main checking account and then all of a sudden you deplete your main checking account and it can't give you what you want, then you go tap the asset of the side piece account and you take that $100. But then in a few months, when you need $500 because your car broke down or your tire blew or a family emergency or a medical emergency, the side piece account does not have enough in it to give you what you need because you kept tapping into it, okay? It wasn't designed to do that. So what you need to do is you need to create what's called a reverence account. I call it a mama account, all right? A mama account, okay? Because mama don't need to know what's going on in my household. So mama is in another financial institution. Trust me. She don't need to know what's going on up in that bank account. In my main account, that she can't handle that. She just can't handle it, okay? So she needs to be in another financial institution where I set it and forget it. Because mama may not give me everything I want, but she can always give me everything I need. You remember going to mama and asking mama for money for things that you want, and she says, no, no, no. But then when you really need something, she can always give you what you need. Now, you may call it a mama account. You may call it a papa account. You may call it a Holy Spirit account. I don't really care what you call it. It's a reverence account. It's an account that's separate from your main transactional account, okay? You may use a credit union with a savings account. You may use another bank or financial institution. So when you get your direct deposit, you have $10 per pay period, $20 per pay period, $50 per pay period, $100 per pay period going to this account, because what you don't see, you can't spend. What you don't have access to, you can't spend. And you want to make that reverence account not easily accessible, okay? I prefer my mama account or my reverence account or my mama to be in another state. There may be some things that's going on in the state that I'm in, some things that I may be doing, and mama just don't need to know about that, right? So she needs to be in another state. She needs to be far away. So if she decides to visit me, it takes her effort. Or if I decide to visit her, it takes me effort. That way we know we really need each other. We really want to do it. Same thing with your finances. With the financial savings account, you want to make it so you have to put some effort into getting it. That way you have time to think about it. Is this something that I really need? Or is it something that I really want? Because if it's something that you really want, you're going to spend that money. That's what that side piece account is for. Now, here's the thing. One of the things I want you to do is I want you to do a reality check. Reality check is that psychologically, most of us need a side piece account. Now, disclosure, I am not talking about personal relationships. I believe in monogamy and all that. So we're not talking about that. We are talking about money. So, okay, I don't want to get any hate mail about, all of that stuff. But what I am saying is that psychologically, financially, we may need a side piece account. I may need $50 or $100 to go into the savings account so that when I spend my money, I have that safety net of feeling that I have $100 until pay period. Okay, I might need that psychological feeling, that stability feeling that I can tap into something, if I happen to go over my budget that I per se, or over the amount that's in my checking account. Okay, cool. Just realize that is your side piece account and let it be what it is. Stop wifing your side piece account. Wifing your side piece account is holding so much reverence to that side piece account and not realizing what it is. It's not built that way. It is just built to be tapped into, anytime you feel the urge to do it. As somebody put out there, temporary satisfaction. That is what that side piece account is for, is the temporary satisfaction. Your reverence account, you're going to set aside. So whether you decide to put $10 per pay period, $20 per pay period, $50, $100, whatever you want to put in there, you're going to set it and forget it, because what you don't have access to, you cannot spend, okay? The second thing is that you want to set up that reverence account, wherever it's going to be, whether it's going to be another bank that you have just a savings account with, whether it's going to be a credit union that has limited access to it, limited branches or whatever. I love my credit unions that have 1 or 2 branches, because that means I probably have to work to get the money, and I want to be able to have to work to get to the money, because I need that money for when I need it, not just for emergencies, but for opportunities, to build up capital for my business. To pay for college for my child, to whatever it is that you want to do, you want to be able to have an account where you set it and forget it, and at some point you forget you have it, and then you realize, oh, I have it, and you have a couple $1,000s in the account. How about that? How about that? But the side piece account, you let it be for what it is. I have a side piece account. I have my main account. I have my reverence account. So, I very rarely touch the side piece account, but, if I overspend or whatever, I know that I have a couple dollars there. But my reverence account is called a do not touch account. The do not touch account is on hold. I cannot get access to it unless I specifically go to the financial institution, tell them to release the hold so that I can get access to it. So I'm intentionally tapping into it. And then what do? I treat myself as a financial institution, and I give myself a loan, and I charge myself interest. So if I have $1,000 in the account and I decide to take $500, I'm charging myself 18% interest. And the longer it takes for me to pay myself back, the more money I have to pay myself. So why pay financial institutions money when you can be your own bank and borrow money from your savings account and then charge yourself interest and pay yourself back? And now you're paying yourself back the $500 plus more in the interest. Okay, so now we have to get out of this, dependency on financial institutions to lend us money for our lifestyle. That is called slavery. You know, you're mortgaging your life away for a temporary fix. Don't do that. So why not just have something in place so that you can borrow from yourself? Okay. Now it takes time. You know, if you decide, the less you decide to put into your reverence account, the longer it's going to take for you to build up. Don't do Patrice Washington, my favorite sister. She's the money maven. She used to tell people, don't oversave. You can oversave. Oversaving means that you get a gung-ho about saving, and then all of a sudden you're going to put $150 into your savings account. Well, you didn't do the math. And so when you do the math, you realize, oh, I can't really afford to put $150 in savings because I need that $100 to pay my bills and my lifestyle. And so you end up tapping into it because you oversaved. So the first thing we need to do is be realistic about our spending habits. Okay, the spending habits, our budget, and put it in there. And then we want to save. Okay, we want to save between 5 to 10% of our income. If you can't afford to do that right now, all I have to say is save something sooner. Save something sooner. Hashtag save something sooner. So if you start off with $10 and you grow to 20 and then you grow to 50 and grow to 100, great. If you start with 20 and then grow to 50 and go to 100, great. Start at 50, then grow to 100 and 200, great. Start where you are. Okay, just because everybody says do 10%, your budget may not allow that for right now. But right now you need to start building up your reverence account. And I don't care if you do $2 per pay period. I have one young lady, she's doing $4 per pay period. I don't judge. At least she's putting something away. You know what I'm saying? Because then after $4, she's going to see she can do it. Then she'll probably do $8. And then she'll probably do $12. And then she'll work her way up. So start somewhere, start something sooner. So how do you save when you don't have enough money? One, you build a reverence account. You acknowledge that you probably need that side piece account. And that side piece account is, if you overspend, you have something to tap into, so you're not tapping into the reverence account. Okay. And then 3, well, this probably should be number 1, is set a budget. Understand what your budget is. And a budget is not, a lot of people say a budget is like the B word. It's a bad thing. It inhibits things. No, it really doesn't. The budget tells your budget doesn't tell you anything. You tell your money where you are going to spend it. Because if you keep allowing your money to tell you what you can and can't do, you'll be broke for the rest of your life. So the budget allows you to have the power to tell your money what it's going to do for you. So if you say, money, my paycheck, I'm going to put 10% in tithes. I'm going to put 10% in my reverence account. I'm going to put 70% and pay my bills, and I'm going to keep 10%, and I'm going to spend it on whatever I want. You have told your money what it's going to do. Now, what's going to happen? You may need to reduce some of your expenses. And if you can't reduce your expenses, then you may have to reduce the fund for a little bit until you can reduce the expenses. And if you can, if you still more than that, then you may need to adjust your savings within that. If it's still more, you may need to adjust the giving. Whatever it is, you set the priority. You determine where your money's going. You do not allow your money to dictate what you can and can't do. That is becoming a victim. You cannot be a victim in this space. When you're trying to be financially free, having a victim mindset is not going to work. It's not going to work. You have to be the victor, and you have to take order. Now, it's not going to be everything that you want it to be initially, but once you start setting the parameters, or at least setting the plan, this is what I plan to do, this is what I want to do, you have something to look forward to. I want to be able to give 10% to the church. I want to give 10% to my 401k. I want to spend 70% on bills and my lifestyle, and I want to have fun with the other 10%. That is your plan. You want to do that. And even though you can't do it right now, everything that you work towards is to fulfill your plan, But the first step is you have to save something sooner. Have your side piece account? Cool. It is what it is. But don't wife it. Don't think that it's the end all be all, because you'll never have enough money in that account if you keep wifing your side piece account. It's not built that way. You have to create a reverence account, an account outside of your transactional account, so that you can start setting and forgetting that money that's out there. Don't oversave. Make sure you establish your budget so that you understand how much you can save, how much you can put aside, how much you can spend within that. So I hope that answered the question for how do I save, or how can I save with limited money. Again, do not wipe your side piece account. Okay, that is from the book Financial Fornication. Make sure you get your copy at Amazon.com or MadaMoney.com. Also, if you'd like for me to speak at your event, if you'd like for me to do a money motivational speech at your church or at your school, your university, your organization, I would love to do that. Make sure you go to MadaMoney.com or email me at info@MadaMoney.com. I'm going to be sharing some more answers to the questions you have. If you have a question about money, anything about money, whether it's 401ks, whether it is insurance, whether it is credit, whether it's money, whether it's Bitcoin, whatever it is, whatever questions you have, you can email those questions at info@MadaMoney.com, MADAMMONEY. Again, info@MadaMoney.com. Make sure you share this to someone that you like, know, and trust, or that you really, really do care about. Hey, I love you, and there's nothing you can do about it. Have a great, prosperous day.